Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jayaram Krishnamurthy. And folks, this indeed is a good morning with the Israel and Hamas ceasefire deal done. Furthermore, numerous macro updates were there for us to consume yesterday with the softer US and UK inflation, lower Indian trade deficit, and the surprise decision by the Central Bank of Korea to hold rates instead of market expectations of another cut. So, JK, what do you make out of these updates and how should we read these?
Hey, good morning, Shikhar. Good morning, all. Uh, so I think yesterday was a day of good news all across, and that was good for the markets, chiefly. Uh, you know, uh, First of all, market got big relief from inflation numbers. I would say led by the UK data more than the US data. US CPI data was kind of mixed because headline number was higher, but the core inflation actually came down. So that was not, fully bullish for the markets. But then UK inflation coming off, to 2.5% from 2.6 forecast prior, and steadily coming down. That was a good news. And the UK gilt markets had been under severe pressure in the last few days, and that has actually reversed yesterday, giving a good support to the risk sentiment, because the market had taken a very negative view on the UK fiscal position, and then sold off UK gilts, and then that had rubbed off on many other markets as well in Germany and in the US. So the CPI data finally added to that sentiment by seeing the core inflation coming off. So we saw a big drop in the yields across some tenors and across the regions. The 10-year yield fell by 10 basis points. That 2-year fell by almost similar percentage, and then the UK yields were down almost 20 basis points from the peak. That supported the sentiment in the market. Then if you look at the currency also, dollar got some correction on the downside, which we had been hinting at, because we know that the markets had gone on the extreme, one extreme of discounting almost no rate cuts this year, and then the inflation to shoot up further. Even when Trump takes over, it will be worse. That kind of scenario was what had pushed the dollar up 10% from the low of September. And this is what we had hinted at. This is the right opposite of what we had seen in September. And yesterday we saw some reversal. In fact, last 2 days we have seen some reversal of that. But I wouldn't say it's a reversal, but I would say at least moderation of what the market had been doing. So the Trump's decision, or whatever the announcements on policy of tariff and all that, has been quite well discounted, and that is why the market is now not finding much traction for upside for the dollar. And in fact, from just a day ago, only 0.25% was discounted by the market for cut by Fed, but that has now reached almost two cuts of 0.25%, 50% probabilities. That is how the market has suddenly moved, and that helped the currencies to recover, particularly the euro, the GBP, and yen has made a very strong advance from 158 to 155 as well. Now, some optimists are even looking at a March rate cut by the Fed. Now, let's also remember that uh, the president's nominee for Treasury Secretary post, Mr. Besant, faces a confirmation hearing by the Senate today, and his confirmation hearing before the Senate committee could serve as a catalyst for reversal in the bond markets as well, because his stance on the dollar often sets the tone for currency policy, and if he signals an openness to a weaker dollar, it could spark major realignment across the forex space in the medium term as well. So that has been the story of yesterday. Of course, dollar overall took cue from the bond yields falling. The many expect Trump's policies to bolster the dollar, but the potential for moderated trade actions, expanding deficits, Treasury Secretary favoring competitiveness, and risk to Federal Reserve possibly independence being upset have been the consensus view, and putting some downward pressure on the dollar in the Trump's second term. Yes, similarly, we had good news on the Indian side as well. We had almost a $16 billion drop in the trade deficit. Of course, part of it was due to the miscalculation on the gold import, which was reported for November. Even accounting for that, I think there is a big drop in the import. Exports, on the other hand, having seen a big drop last month, have seen a big rise. Yeah, I wouldn't look at this as a very big positive development, because I think these are some technical adjustments that we are seeing probably. And if you look at the year-on-year figure, exports have just slightly risen, whereas the imports have gone up by 6.5%. So the deficits in India are here to stay so long as we have the big dependency on oil. And I would put our average deficit, current merchandise trade average deficit, around $30 billion, and overall net of commodities and services is around $8 to $9 billion. That is where we stand as of now, and that is not sounding good in the context of where we are not having enough capital flows to fund. That is the reason why the rupee will continue to be under pressure. So, of course, the other good news also was that the Israel-Hamas ceasefire after 15 months of war. Of course, markets did not react much to this. Oil is still higher and gold is also still higher. Perhaps this was kind of discounted with the market some time back, because Israel had stopped their attacks for quite some time now in the last 1 to 2 months. So but anyway, I think some worry for the market is taken away officially. Therefore, that's all again good news. Rupee also participated in the dollar's retracement yesterday, coming off to about 86.32 in the onshore market and even 86.26 in the offshore market after the CPI data was released. Again, as I said, 86.20 seems to be a very good support for the dollar rupee, and we can see some good demand those levels from importers. Who knows? Even the nationalized banks may be buying. They're having been big sellers at a higher level. So we have only left two full trading sessions before Trump government takes over, and we look forward to what they say about their policies, whether it will be an immediate announcement or whether it will be a phased out announcement. A lot of questions unanswered. So market will not take any major stance ahead of this event. For the day, of course, we have important numbers, retail sales and jobless claims from the US, which will be for a short-term focus, but the larger focus will be on the Trump government taking over. Thank you.
JK, that was really good. And yes, folks, there was not much of a reaction on the Israel and Hamas ceasefire deal, as much of the move was more or less discounted by the market participants. But on the domestic front, we did see rupee participating in the dollar index correction. And even though we had a significant recovery or moderation in the trade deficit, as JK mentioned, there is on the year-on-year basis barely any sort of rise in the overall exports, whereas imports have risen. So overall trade deficit may remain on the higher side for us, which keeps the pressure on the USD INR prices as well. Gold and oil continues to stay higher, but it was the UK inflation which brought in some good news for the financial markets, as the pressure on the gilt yields or the gilt bonds and the UK yields were released or reduced a little, with the UK yields coming down almost 20 basis point. The USD correction, as it has been discussed in these commentary for the past 2-3 days, did take some place, with euro moving higher and eventually coming back. But overall correction in GBP and JPY is also observed. So overall markets are in some sort of a moderating phase before the inaugural ceremony of the president-elect, and they may not be taking too many directional bets as of now. So that's it for today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for listening in.